Hey everyone, and thanks for jumping back into the cryptoverse. Today, we're going to talk about Bitcoin, and we're going to be looking back at market cycle theory and discussing where are we in Bitcoin's market cycle. We're going to talk about what that could mean for future cycles, what that looks like. If you guys like the content, go ahead and subscribe. Let's go ahead and just jump right in. Look, I know a lot of people are hurting right now, right? I see the comments, okay? A lot of people are upset. Emotions are at all-time highs, all right? I see people kind of turning on one another and everything. Look, the market has a way of keeping people on their toes, okay? And I will be the first to admit, in the short term, especially in the short term, no one knows at all what is going to happen in the market. At all. No one knows, okay? The longer you're in crypto or in any asset class, the more you will realize this is true, okay? No one knows what is going to happen with Bitcoin tomorrow. No one knows. Okay, it could go up, could go down, could go sideways. I mean, it's going to go right on the chart, right? The only thing we can say, it's not going to go left unless we all of a sudden go through like some black hole and go back in time. But look, no one knows what's going to happen in the short term. Over the macro scale, one of the things we've discussed on the channel at length, and we've been criticized for it quite a bit over the years, is the idea that we do not have to have a parabolic rally in Q4, but that it's not a bad thing if we don't have a parabolic rally in Q4. To me, is it not better to slowly trend up with time? Now, some people are saying this is the bear market. Okay, we're going to talk about that too. But is it not better to go slower up with time? The problem with going up parabolically is that you do have a bear market. Look at 2014, look at 2018, that lasts over a year. Okay, and then a long accumulation phase as well. So we want to talk about the different theories. All right, and I want to talk about them. We're going to talk about which ones have already basically been killed, which ones could still theoretically stand the test of time, and what we're looking like as we continue to head into 2022. Okay, so the first thing is I want to show this chart. We're going to go through a couple charts. We're going to talk about the cycle theories. We're going to sort of wrap it all up and then provide an outlook. Okay, so this is the chart that I've shown for years on the channel. It's the reason why I think we're going to lengthen. Look, the 4-year cycle theory would say that we have to peak either in December or probably sometime around December. Okay, because if not, then we're not having a 4-year cycle. You could argue that we have diminishing returns in a 4-year cycle. If November was the top, then it could be a 4-year cycle and diminishing returns. But we'll talk about that more a little bit. Look, so far the cycles have lengthened. Not just by a month or two. So I've seen some people sort of push their predictions from, November. Now they pushed them to January or February. But look, these moves show that they actually lengthened by a year to a year and a half. I mean, I know that sounds crazy. Some people are like, what has been smoking to say that the cycle could last that much longer? The only 4-year cycle was the last one. Okay, there's a lot of recency bias. Only 4-year cycle was the last one. We had one cycle over here that lasted just over 250 days or so. That was a really quick cycle. We had another one that lasted 700 something days. The third one lasted about 4 years. This one doesn't have to last 4 years. It could last 5.5 years. It could last 6 years. There's no reason it has to last 4 years. So you look at this chart and you say, well, could it last that long? Well, sure. These extended by several hundred days. Why couldn't this one? Why do we have to limit it to be the same length as the last one? Now, this is an interesting chart, and I want to use this chart to talk about the ramifications of future cycles. And this is something we've discussed at length many times before. The current cycle is barely off the x-axis when you look at it on a linear scale and compare it to prior cycles. Okay, this is a normalized ROI. Cycle 1 is blue, cycle 2 is orange, cycle 3 is yellow, cycle 4 is this purple squiggle that you can barely make out on the screen. You can barely see it. What does this mean? Well, let's suppose that the cycle does lengthen. Let's suppose that we do end up putting new all-time highs in, and we don't have to wait until the next halving to do so out in 2024. Let's suppose we do put in new all-time highs. Well, does that mean that the next cycle is then, let's say this cycle ends up being 5 or 6 years, does that mean the next cycle is going to be 8 years or something? So then eventually you get to the point where it sort of just slowly becomes more and more like the stock market. What's funny though is this year the stock market became more like crypto in terms of volatility. But over the macro scale, you can imagine that on the linear scale, it's going to be hard to make out. You can still probably make something out on a log scale if a future cycle does something like this way down here. But over the macro scale, if you're looking at the span of a decade, a lot of people are going to miss this point down here. And so, it's somewhat silly to always compare it to that first initial point, especially in, say, a future cycles, like if the next cycle ends up being way out here. So it will more or less evolve to be a lot more like the stock market as time goes on. With that said, I still do think Bitcoin will put in new all-time highs before the next halving, right? Well before the next halving. I don't think we have to wait for a long bear market. I don't think we have to wait for another 1 to 2 year accumulation phase. I don't think that's going to play out like that. So, looking at this chart really shows that this cycle has not really been that impressive so far. Now, one of the things we've mentioned is that the cycle, I don't think it's 4 years, but I also don't think that it needs to just be like 4 years and 2 months, right? As some people say, well, it's going to go just into January or February and then it's going to be over. Why? Right? Why? I mean, the other cycles lengthen by 1 to 1.5 years. Why does it only have to lengthen by 2 months? It doesn't, right? I mean, it doesn't. If anything, this most recent pullback shows you that 99% of people in crypto have no idea what's going to happen, because again, a lot of people have been very adamant over the last several years that Bitcoin's going to go to 100K by the end of 2021, or it's going to go to 300K by the end of 2021. That's not happening, right? I mean, we're not seeing that. It's not playing out at all. So that shows you right there that most people have no idea what's going to happen in the market, right? I mean, it shows right there they don't know. So we have to take this one step at a time, okay? Look at this chart. We've used this chart to show periods of undervaluation and overvaluation. This is the Bitcoin, the Beauty of Mathematics series. It's on the entire asset class. As of December 4th, so a day or two ago, a couple days ago, we were still technically overvalued with respect to the fair value logarithmic regression trend line. But even here, as I've mentioned before, this cycle is not going to get to 10 trillion this year. It could take it another year, at least. It could be 2023, guys. Okay, I mean, like, it doesn't, everyone's in a rush, right? Everyone wants their gains and want them now, okay? But cycle theory would suggest that a parabolic Q4 2021 would have actually been going against what the data would have suggested would happen, okay? So as far as I can tell, things still look relatively good over the macro scale. In fact, these type of washouts keep us at bay. They keep us from potentially having to experience an 85% correction in the future. Now, I do think we will have future bear markets, but I don't think we're going to go back down to $10,000 from these prices, okay? I think we will have major corrections, but no, I don't think we're going to go back to 10K. So you look at this chart, you notice these impulsive moves. Each cycle gets longer and longer and longer. And not longer in the sense of, oh no, it has to go parabolic in January since it didn't do it in December. No, we have time. Time is on our side. Okay, that is my theory. That is what I think is going to happen. And we'll see what happens. Okay, now, this is a chart I've also shown since 2019. And this one gets probably the most criticism, and somewhat rightfully so. Okay, so on this one, we're plotting time versus the day. We're plotting the days in Bitcoin cycle and then the peaks in which they occurred. Sort of flipping it into an Arrhenius plot, 1 over time. Peaks 1, 2, and 3. You can fit it to a curve pretty easily. What do you get for cycle 4 peak? When does the cycle 4 peak come when you look at it on this chart? If you've been following me at all for the last couple of years, even the last, we showed this chart in the last 2 Bitcoin Beauty Mathematics videos. Right? When is the 4th peak, according to this chart? Not till the summer of 2023, in fact. I know it's weird, right? I know it sounds weird to a lot of people, and it's been highly criticized over the years because everyone wants to see a parabolic Q4 in 2021, and then they want to reaccumulate and then rinse and repeat every 4 years, and then everyone will be a billionaire, everyone will be happy, and sorry, but that's not how it works. Okay, it's not how it works. I still think we have a long way to go. I don't think we're stopping here. There's going to be some volatility, of course, but I've said all along, I don't think we're going to have a parabolic Q4. There's no reason it has to be a parabolic Q4. Just because it was parabolic in 2017 and 2013, it's recency bias to assume it has to play out again like that. I think we're being proven, that theory is proven true. Now, what I want to do from here is we're going to talk about a lot of the different theories, okay? And we've done this before, okay? So we're going to go through them. The first one, and this has been the most popular theory by far, and now I think we can, technically we still have a little bit left in the year, right? But I think we can more or less agree that this theory is dead, okay? The 4-year cycle with no diminishing returns, okay? Which is a really weird concept to me, okay? So with no diminishing returns. And I've never understood why people think this. Like why people think that you're going to have phases or cycles that put in higher returns than the last cycle when the market capitalization is so much higher. It just doesn't make any sense. So no diminishing returns included. So 4-year cycle with no diminishing returns included. I think we can officially say this one is dead in the water, which is what we've said all along that is not going to play out. We're not going to go to 300K by the end of the year. The next one, which could still theoretically be true, which actually not a lot of people have this theory, but it's a 4-year cycle with diminishing returns. It's interesting because I would think that this theory would be more popular than this one, at least in terms of rational thought. But in actuality, there are a few people that think this, okay? So certainly there are people that think it, but the majority of people on crypto Twitter, crypto YouTube have been pushing this one as opposed to this one with diminishing returns. So theoretically, this one could still be correct if November was the peak, because you would have more or less had a peak in November, or it would have been a peak in November 2013, a peak in December 2017. If this is a peak in November 2021 and we don't put in new all-time highs until after the next halving, then you could argue still that it's a 4-year cycle, but the diminishing returns played out. My theory is this one, lengthening cycles with diminishing returns. Okay, so lengthening with diminishing returns. This is my theory that I've been following for a long time. Okay, and this would mean that if number 3, if lengthening cycles is going to play out with diminishing returns, we have to take out this all-time high at some point. Doesn't have to be this month, but we cannot wait until the next halving. If we're waiting until the next halving to go parabolic again, then you could easily make the case that it is a 4-year cycle and we have diminishing returns, and that the diminishing returns are a lot worse than people thought they were going to be, right? And instead of going to 100K, they only went to 69K, and then now we're going to have to wait several years just to get up to over 100K. This would be the idea of a 4-year cycle with diminishing returns, and that 69K were the peak. Okay, so I think that number 3 is the most likely. There's also lengthening cycles, okay, without diminishing returns. And so then this one would say, and there's not very many people that think this one, but I would say there's probably going to be a lot more people that start thinking this one. So I'm guessing that the people that have thought this is the one that's going to play out, they're probably going to switch to this one, okay? Lengthening cycles without diminishing returns, because the only other option is to basically say, well, that number 2 was correct and that we're just going to go down. I anticipate a lot of people are probably not going to say that, or not going to want to say that, and so then they're going to go with the lengthening cycles without diminishing returns, and they're going to keep their 300K predictions, but they're just going to say that it's pushed out further and that lengthening cycles is true, but it's going to take longer. I would argue that number 3, in my opinion, is the most likely. After that, I would say that, honestly, I think there's I might be inclined to say that this one and number 2 might even have about an equal probability. The reason I say that is because I don't think either of them is going to play out, but if I had to pick one, I don't really know which one I would pick. I mean, you could make a case for either of them. You could say, well, 4-year cycle with diminishing returns could make sense if this ends up being a double top, which I don't think it is. But the other theory could be, well, how can you have without diminishing returns? Well, I mean, I guess theoretically, if the cycle extends for two and a half more years, then maybe it's possible we get to 300K. I don't know. I don't think it'll extend that long. But again, I don't think either of them will pan out. I still think number three is the most likely, but I'm just sort of showing you the different theories. I mean, it'd be nice to have rational discussions about different theories without jumping down each other's throats, I think. And look, the guys that think this, the 4-year cycle with no diminishing returns, look, I mean, I think we just have to cross it off the list and then look forward. Okay, there's no point in harping on the past at this point. Let's just say, look, it was a nice theory. Obviously, they based it on some evidence. I'm not going to say the evidence wasn't there because there's always a little bit of evidence you could say for any theory probably. There was a little bit of evidence that it could pan out. I didn't buy into it. But now that it hasn't panned out, hopefully we can put it behind us and then move forward stronger, right? We can move forward stronger rather than thinking that we have to have this parabolic rally just around every corner, okay? So I think number one is off the table. Number two is still theoretically in the cards if this is the peak. Number three is what I think. I think we still will put in new all-time highs. I don't think we have to wait until the next halving. And then you also have number four, which, I mean, we can talk about, I think there's really no point in talking about number four until number three is proven. At least the first part of number three. Like, let's prove that the cycle is lengthened first, and then we can talk about how high it can go. Until then, we're sort of just, we're playing in the sandbox, right? Now, there's also the stock to flow model, right? Which, I mean, is not, in the short term here, it's not looking super likely, especially the stock to flow cross asset. So there are a couple differences between these two, and I want to outline them. I think there's a lot of confusion as to what they are. So the stock to flow model predicts an average price of Bitcoin of 100K this cycle, okay? And this is not to be confused with the floor model, right? Not to be confused with the floor model that clearly has not panned out, right? It has not panned out. But, I mean, what short-term price prediction has, okay? I mean, let's be completely honest. What short-term price prediction has panned out? I mean, you know, it worked out relatively well in August, September, and October. Pretty good, right? I mean, did it work out in November, December? No. But look, if it does work out, if we do reach those prices, as I've said before, which I think we can, we need a lengthened cycle. Okay, so I'm still thinking that we will get a lengthened cycle, but I don't think that we're going to get to those higher prices as quickly as I think Plan B originally thought. But again, people are allowed to make short-term predictions. They're allowed to be wrong. And that prediction that the floor model, you know, while I do think it's a relatively simplistic prediction, I mean, it seems like it's just a 10x from the prior monthly closes of 2017. I don't know if that's where he got it from or not, but it was actually fairly accurate for 3 months in a row. So, I mean, look, if you were counting on that model to define your entire strategy, then that's on you, right? That's on you. But look, I think a lot of people confuse the stock to flow model and the stock to flow cross asset model. So I want to clarify them. The stock to flow model does not predict peaks. Okay, it's talking about average prices. So the average price of stock to flow between the last halving and the next halving is saying 100K. The stock to flow cross asset model says 288K. All right. Now I'll be honest with you guys. I think this one is just simply too optimistic. I do. Okay, and one of the reasons is additionally, it's not even calling for a peak of 288K. It's saying the average price of 288K. And so for an average price of 288K, at this point, you'd have to go to prices of like $500,000 this cycle, which I don't think is likely. Okay, I don't think this is likely. This most recent drop, I think, will further demonstrate that. Because look, we're already 18 months in, and they're only separated by approximately 4 years. And we've spent a majority of that time below 50K. So how in the world can we get to an average price of 288K in the next 2 years or so? It just doesn't seem very likely. So I would say this one is likely not going to pan out. I think he would agree with that, actually. I mean, I had him on the channel. He says he thinks maybe I'll be somewhere in between this model and this one, which could be correct. This one is more likely, but even that, to get to an average price of 100K is a tall order because, again, we have a lot of work to do to climb past 69K. Probably going to be resistance at 100K as well, and over the next 2 years, to have an average price be 100K, that means you have to go up well above 100K and spend a lot of time above 100K. It's still possible. I mean, you can still get average prices of say 70K, 80K between this now and the next halving potentially. But 100K seems kind of high. I think this one is extremely high. Okay, but it still is a model worth following, in my opinion. I know once upon a time he was not super fond of lengthening cycles, but I do think part of that was maybe misunderstanding what a lengthening cycle was. I don't know. This is just when we had him back on the channel a while ago, and I mean he was pretty clear that you could still theoretically have a lengthened cycle and have the stock to flow model be correct. But we'll see what happens, right? We'll see what happens. There you have it, right? There's the cycle theory laid out for you. Okay. Again, I know a lot of people are hurting because a lot of people were counting on a parabolic rally in Q4. I know a lot of people are counting on that. It's not happening. But then again, the data never suggested it would happen. As I said many weeks ago, as far as I can tell, 2021 is just a lot of sideways action, right? Between 30 and 60K. It's just been a lot of sideways action. I said, I don't think we're going to have a parabolic Q4. A lot of sideways action. We'll see what comes in the coming year and hopefully beyond. I mean, as I said, we could go into 2023, which I know sounds crazy, right? I'm not saying it doesn't. But I got to go with the data over what my emotions or what anyone's emotions or what we want to happen say. A lot of people would say they want it to go parabolic now and be done. We could still have a ways to go, okay? And to show you that I'm not just concocting this theory now, just go back and look at any video on my channel every month, every couple of weeks for the last 2 years. We've been talking about this. Even if you go back to 2019, we have a video talking about how, 10 trillion as an asset class probably can't come until about 2023. Okay, late 2022, perhaps. Could happen in 2022. I don't want to say that it can't because 2022 could see a $10 trillion asset class, but it could still be in 2023 based on what the data suggests for this market cycle. Okay, so I hope you guys enjoyed it. I know a lot of people are kind of getting really emotional right now, and people are criticizing some of these theories that didn't pan out with regards to the parabolic rally in Q4. But I mean, at this point, I don't really think that's helpful. I think that, look, data didn't suggest it was going to happen anyways. It hasn't happened. Therefore, the data was correct. Let's just move on stronger, showing that, look, we don't have to have a parabolic Q4, which would then inevitably be followed by a pretty brutal bear market. We don't have to see that happen. Let's see what happens as we get into the new year. I know a lot of other people are saying this is the start of the bear market and that we're just going to come back down, back to these levels down here and then consolidate and then wait until 2024 to break out again. I think that's relatively unlikely. Okay, so I think that's a relatively unlikely path. We could still certainly come down and test some lower levels. I'm not saying we can't come back down and test some lower levels, but I don't think we're going to go back down to 10K. Okay, I don't think that's going to happen. So there you have it. That's the update. I know a lot of people are upset, but please just remember this is a volatile asset class. The data has always suggested that the cycle would lengthen anyways. The fact that we're at 49K in Q4 of 2021, I think is just further evidence that that is the case. Thank you guys for tuning in. Make sure you subscribe. I'll see you next time. Bye.